Friends, welcome to a new edition of our weekly update from Proficient Equities Private Limited. I'm Shumoy Goswami and I'm welcoming you all. This is 7th of April 2018, and let's come back to the topic of the market. But before that, I would like to show what happened globally in the last 1 week. And so let us open the global markets first. As you can see in your chart, first of all, we will start with the dollar index, right? This index actually tracks how the US currency, which is called the green box, has performed against 5 other major currencies across the world. And what we are doing this is because since most of the global commodities are denominated in terms of dollars, that is gold, crude oil, silver, all major commodities, copper, all other base metals are denominated in terms of dollar. So if there is any strength in dollar, the global commodities see some weakness, and vice versa. If the dollar weakens, then the commodities actually rise in price. So they have a strong inverse correlation with the dollar index, and that's why it's best approach to start with analysis of the dollar index. Now, what we see here is the daily chart of dollar index, and what you can see here is the daily chart of dollar index, and we see that last week dollar index had actually risen, although it is in an intermediate downtrend, but from so the dollar index also is in an intermediate downtrend, but last week we saw a pullback, and from around 88 levels, the dollar index went to 90, and this was shown in the little bit of rise in crude oil last week and gold. Now, this is a little bit of snapping away from the negative correlation, which we will come maybe later. But in case dollar index goes above 90, as we can see from the top of the March, 90.5 was the last value of dollar index. If it goes above that, then chances are high that the sell-off in crude oil that we saw last week is likely to continue, and the same holds true for gold as well, right? Now, there is one thing to talk about crude oil, is that crude oil prices actually mirror the state of economy around the world. So when the S&P 500 is actually challenging its 200 DMA, as you can see from this chart, the S&P 500 has been taking support for past 10 days on the 200 DMA, but crude oil has actually not come close to its 200 DMA. Crude oil was still holding its 50 DMA mark, which is a sign of strength. But although yesterday it saw some important sell-off and briefly breached 62. So this weakness in crude oil is likely to intensify if dollar index goes above 90. This is the most important point that we need to know, right? And same holds true for gold as well. Gold is also taking support from its 50 DMA, and if crude oil and if dollar index actually goes above 90, then chances are high that gold will break below its 1310 level. And if gold breaks that level, then the intermediate choppiness will end and gold will begin its intermediate downtrend. Okay, now let's come to the equities part. This is, as you can see, this is the daily chart of S&P 500, and S&P 500 is actually taking strong support from its February low. On February 6, there was a huge sell-off, and it briefly violated 2550 regions, and from there it went higher to 2775 regions, and again selling resumed, and right now it is negotiating a very important support region. It is important from two perspectives. First, it is at the same level as the February low, that is around 2600 on closing basis, and it is also negotiating very strongly with the 200 DMA. If the 200 DMA gets broken and also S&P 500 violates the February low, chances are really very high that more pain is to come in this index. And if S&P 500 shows weakness, then chances are high that in India, our equity will also be under pressure, will also come under pressure. So having said that, having given a global perspective of the equities and commodities, now let us come to our own Indian market. This is the daily chart of Nifty 50 index, and as you have seen, I have plotted here two moving averages. The red one is the 200-day moving averages, and the blue one is the 50-day moving averages. In the middle pane, you can see the MACD, and in the topmost pane, you can see the stochastic. Stochastic, I prefer the 733 version. Earlier, I have explained this point. This is the percent K parameters, which is a 7, slowing by 3, and percent T parameters is also 3. So I can explain this later. But let us, for the time being, analyze Nifty. Okay, Nifty again formed an important top in the last week of January, and since then it is retracing. It has retraced more than 10%, and it also went below the 200 DMA briefly in the last week of March. But this week again it pulled back higher, and there was lots of volatility this week, right? Prices on one particular day closed 1% higher, and the following day it closed nearly 1.5% lower, followed by again a huge rise on Thursday, and on Friday we see a little bit volatility. So right now there is a lack of sense of direction in the market, but the long-term picture is like this. There are signs that the intermediate downtrend is nearly being exhausted. Exhausted in the sense that uh, today we closed at 10,330 level, and the series of lower tops, which you can see here, yeah, the series of lower tops, as we can see here, is actually broken, right? The last top on 1% zigzag function was made at 10,245, and it now went higher than that. So this is the first sign that the series of lower top has been broken and the intermediate downtrend is nearing an exhaustion. But although this is not a strong bit of evidence, so we need to look further. The second point is that although Nifty went below its 200 DMA for the last 2 weeks, but it did not stay there for a long enough period, right? And there is really strong demand at sub 10,000 levels. Prices did not stay much longer at those levels. You can see the prices are actually going higher when it has touched the 200 DMA. The next point is that the second last top was at 10,426 on closing basis, right? So if prices go above this region, then the odds will increase that the intermediate pullback is nearing an exhaustion. But what is the confirmation? Confirmation will come when this 50-day moving average, which is at around 10,464, and it is sloping down, will again be breached, and prices will go higher from this level. By doing that, prices will be closing above both the moving averages of 50 and 200 day denomination. So that will be a sort of confirmation that the intermediate downtrend is nearly over. Now look at the middle pin of the MACD that we have plotted here, right? MACD is showing an extremely oversold region, and chances are high that it is likely to go higher. This particular value of MACD as you can see from my chart to the left, there is no such low value historically in past 1 year. Yeah, this kind of value was reached for MACD only in December of 2016, right? So that's way long ago here at around this region. So this is an extremely oversold region in the short term, and chances are high that prices will go higher from here, but the confirmation is still not there. 10,460 or roughly 10,500 will mark as a make or break zone for this Nifty index, right? And there are other indexes also, which is telling little bit of strength coming back in the market, right? Say for example, I have seen that in a 14-day time frame of relative strength index, yeah, as you can see, this one. I have marked the halfway mark of the 14-day RSI. The general perception and interpretation of RSI is that there are lots of interpretation of RSI. One of the most important interpretation is that if RSI really goes below its halfway mark, which is the 50 mark, I have marked here the 50 mark here on the horizontal line, that signifies intermediate weakness or an intermediate bear market. So last week I saw that RSI in this particular time frame, which is 14 period, actually stayed above the 50-way mark, which is the halfway mark. So this adds to another weight of evidence that the bear market or the intermediate pullback phase is nearing an exhaustion. But as I told you again and again, that the ultimate confirmation is still pending, and we must not take the final call right now. Now here is another dimension of the analysis, and that is the Fibonacci retracement levels. As you can see from this chart, I have drawn a Fibonacci retracement level from the January top till the March bottom. Yeah, from the January top till the March bottom. And the first resistance was at around 23.6%, which coincides to 10,250 regions, right? Here was the first resistance, which is the 23.6% of the entire pullback from the January top to March low, and this was at around 10,250 levels, right? Now Nifty successfully negotiated with this level and went higher this week. So we can say the next level for Nifty is 10,420 approximately. So if Nifty stays above this 10,250 mark, chances are high that the next target becomes 10,420 levels, and that will add more weightage to the bullish part of argument. But as I am telling you again and again, that the final confirmation will come when Nifty closes above both the moving averages of 50 and 200 illumination, right? And what is the opposite argument? Whatever we have told right now is the bullish arguments. What is the bearish argument? The bearish argument, most importantly, comes from the weekly chart. As we have seen from the weekly chart, we have seen nearly 1, 2, 3, 4, 5, 6, 7, 8 weeks of pullback since January last week, and there is 2 weeks of upward movement, right? So this could well be a pullback, right? Nifty really has broken its 200 DMA after a pretty long period of time. Last time it went below the 200 DMA was in November and December of 2016. So after nearly 15 months or 16 months, Nifty had broken the 200 DMA, and this kind of breaking may not mature at one go, right? It may take several attempts for the bears to convincingly violate this level. So the danger is not over as yet. Yeah, we cannot say the danger is over as yet, because whatever we saw last 2 weeks could well be a pullback of the intermediate downtrend that we are in. And this will be confirmed if Nifty again goes below this bottom, right? Uh, on Wednesday, Nifty closed at around 10,280 levels, to 10,120 levels. And the following day, there was some good news from US regarding the trade war between US and China that subsidized or whatever, and actually prices jumped up. So this caused huge volatility in the market. But this bottom stays as a make or break zone for both the bulls and the bears. Now, if Nifty convincingly breaks this level, that is 10,128 or roughly 10,100, then chances are really high that the pullback that we had seen in the last 2 weeks is really over, and the intermediate downtrend is resuming. So right now, I cannot give you any confirmed opinion about what the direction of the market would be in the next week or in the next 2 weeks. But these are the make or break zones. In the upside, we have some 10,460 regions, 10,470 regions, and in the downside we have 10,100. If either of these levels are broken, then the next direction of the market will be finalized. Now, having said that, what we saw last week was that the mid-cap stocks, now I'm coming back to the stocks, the recommendation of stocks for the next week. What we saw last week is that the mid-cap stocks saw some extremely bullish movement, and that is the general nature of the market. If the market is bullish, the mid-cap stocks tends to outperform the large cap stocks to the upside. If the market tends bearish, then the mid-cap stocks again outperform the large cap stocks to the downside. So the volatility remains higher in the mid-cap sector, and that is seen in the Nifty 200 index, Nifty 100 index, or the Nifty 500 index. All these indices saw very strong volatility and very strong outperformance as compared to the large cap index, the Nifty 50. So this week, our focus will remain mostly on the mid cap stocks, and I can assure you there are some very strong mid cap stocks, mid cap performance that we saw last week and for the past several weeks. But maybe if market goes into a corrective mode, these mid-cap stocks may not perform that well. But I will request you to remember these names, not to forget these names. And whenever there is any sign of the strength returning to the market, these stocks are extremely likely to rise higher and outperform the overall market. So first of all, I will try to draw your attention to this stock called the Jubilant Food, Jubal Food that we commonly call it. I have drawn here a horizontal line, and as I can remember that I also showed this stock in this edition of our weekly update a few weeks ago. So the outperformance continues. As you can see, the last time it made a top was in the third week of January, and it was at around 2,300 level. Now, when Nifty entered into a pullback phase, the stock also saw some sell-off, but this sell-off was really a consolidation phase. You can see that this particular region from last week of January to the second week of March, when Nifty saw tremendous weakness, Nifty came back, Nifty pulled back some 500 points in this period. Jubilant Food actually did not saw much of sell-off, right? It actually stayed in a consolidation phase, and whenever Nifty showed some resilience, it again started its ascending, and it started to rise. And previous week, actually, Jubu Food closed to its lifetime high after surpassing the previous January top, and at around this level, it was a clear buy signal, 2344 region on Monday, the previous Monday. Now you can see from this chart that there is a significant uptrend in all time frames. This is the lifetime chart of Jubilant, and as you can see, the current primary uptrend started from June, and prices have nearly tripled from there. But that does not mean we cannot buy this stock. We have to buy this stock. We will buy at around 20. The stock closed at 2430 regions, and the last bottom was made at around 2300 regions. So unless this bottom is broken, this strong momentum is likely to continue. So for the time being, this bottom will be the stop loss, and any pullback will be a buying opportunity, right? Actually, longer term time frame, this bottom, this consolidation phase that you are seeing in February and March is actually the stop loss. So unless this consolidation phase gets broken, and this is tremendous support here, as I'm telling you, lots of shares actually changed hand in this region, and unless this level gets broken, which is roughly the 2000 levels, this primary uptrend in Jubilant Foodworks is likely to continue for long. So this is a long-term buying stock, long-term buying candidate, right? The next stock that I would like to draw your attention to is Trend, right? I'm not showing this because there was a strong breakout yesterday, but actually this stock is again in the primary uptrend. The primary uptrend means an uptrend which lasts for more than 1 year, right? And you can see the nature of the stock, the nature of the primary uptrend. Although there was a pullback in December to February, but this pullback got exhausted, and it is right now outperforming Nifty, right, and all other large cap and many mid cap stocks. So Trend remains in our radar, and we will buy Trend whenever we get a pullback. And overall stop loss for Trend will be at around this region on closing basis, 339 or roughly 335 regions. So unless this region gets broken, the uptrend in Trend will continue. Shriram Transport Finance, right? As you can see from the chart, again the stock closed at a lifetime high, and this is what I mean by continuous outperformance. Nifty is far below its lifetime high. Nifty is nearly right now 9% or 10% below its lifetime high. But the mid cap stocks that I'm showing you is actually trading at its lifetime high. So this is called relative outperformance, and it is best to buy stocks which are relatively outperforming the broader index, right? So Shriram Transport Finance also saw some strong demand this week, and it closed at around a 1500 region 1585 region, nearly 1600 region, and all pullbacks in this stock will be buying opportunities. Actual support exists at around 1460 region, right? So this is the support lies at around 8% lower. So I will suggest not to buy entire stock in one go, but buy in installments. And this bottom in February, that 1260 region, this bottom, as long as this bottom holds, so the primary uptrend survives. So you can make my word, and remember this, whenever there is a pullback comes in the market, Sriram Transport, Finance, Trend, Jugo Food, all these stocks are excellent buying opportunities, right? Now see this stock, Lakshmi Machine, right? I have been tracking this stock for near over 10 years, right? And this stock has an excellent history of uptrend, right? Uh, this is the you are seeing here the history of this stock of over 22 years from 1995, and this was the 2008 bear market, and after forming a bottom at around 455 region, this stock has given a huge return, and the following uptrend is extremely strong. Although this stock used to be over 10,000 at that time, and it is the price that you are seeing here is a result of lot of stock splits and bonus shares issuing, but that does not mean that the stock is anything other than a strong primary buying candidate. So you can see the consolidation phases here, right? So once this consolidation phases was penetrated upwards in last week of February at around this level, the stock became a buying candidate once again. And look at the time period of this consolidation. The consolidation phase lasted nearly for 7 months, right? So this in-swing uptrend that came after this consolidation period of 7 months is very likely to be long enough. Although prices have gone high and it has appreciated over 10% from here, but this uptrend is likely to continue for even long period of time. So this is another stock that I'm drawing your attention to, right? And one of my all-time favorites is Britannia. From the FMCG sector, Britannia remains a clear winner. And look at the pattern of the chart, right? Looking at this chart, it really does not give us a feeling that Nifty is 10% low from its all-time high. The stock really did not see much of sell-off, right? It only went into a brief consolidation phase, just like Lakshmi Machine, right? And when this consolidation phase of past 5 months really ended in the first week of April, Britannia again resumed its long-term primary uptrend, right? This is the chart of Britannia that I'm showing you from 1994. This is definitely in logarithmic scale. This is not in linear scale, but this is the nature of the uptrend of this stock, and you must be aware that any pullback in this stock is a likely buying opportunity. Overall stop loss will be at around 4800 region, because that is where the consolidation phases bottomed out, right? Now, having said that, I will also like to draw your attention to some of the selling parameters, selling candidates, and I'm supposing that Nifty may not go above its 10,450 mark. If Nifty violates the 10,100 mark, then the intermediate downtrend really resumes, and you should be aware that there are some excellent selling candidates as well, right? So first of all, I would like to draw your attention to idea. Look at the stock of idea. In fact, Bharti Airtel is also similar in appearance like idea. The telecom stocks, there must be some extremely weak fundamentals about the telecoms. So Bharti and idea are showing up similar patterns, and both of them are excellent selling opportunities, right? First of all, let me show you idea, and this bottom that occurred at around 72 regions or 73 regions in October of 2017 is the nearest target, and if this level gets broken, if this level gets broken, then the selling will intensify, right? And idea really remains a selling candidate. However, being extremely oversold in the short term, it can show some pullback. So it will be better if we can sell in that pullback, right? And Bharti shows a similar pattern that I showed you. In fact, Bharti is even weaker than idea, and yeah, pattern wise it is even weaker than idea, and last stop was made at around 421 regions, and any pullback can be sold keeping that level as the stop loss. So all these things will materialize if Nifty breaks the 10,100 mark, right? Adani Enterprise and Adani Power are the other two stocks that I told you in our last weekly edition. And yeah, the sell-off really intensified this week, right? Adani Enterprise also broke below its important support at this region, and it actually made a low to 126 levels, right? So again, it is showing some pullback, and any pullback can be sold as Adani Enterprise remains a selling candidate. The overall stop loss will be 167 regions, right? And last but not the least is the Adani Power. This is again a selling candidate, and I showed you earlier, but it actually did not come lower this week. It actually went higher, but it is right now, chances are high that it is forming a top. So once these kind of levels are broken at around 24 or 2450, these levels are broken, the longer term downtrend, as you can see from the chart, this is really underperforming the Nifty index. So these 2450 or 2460 levels are broken. Adani Power remains selling candidate, right? So this is the overall outcome that I gave you for the next week. I'm wrapping it up again. Nifty right now is in a consolidation or in a no trade zone. The upward region above which we are expecting breakout is some 10,460 or 10,450 levels, and absolutely it should be above the 50-day moving average mark. And in the lower side, if 10,100 gets broken, then chances are high that primary downtrend is resuming. And in case Nifty goes higher, we are expecting the mid-cap stocks to outperform. And we showed you several mid-cap stocks like Jubu Food, Trend, Shriram Transport, Lakshmi Machine, and Britannia from FMCG. And in case Nifty goes below 10,100 mark, then there are extremely strong selling candidates as well, like the telecom stocks, like the PSU banking stocks, which I did not mention in this issue, but PNB, Bank of India, SBI especially remains the strong selling candidates. Adani Entertainment, Adani Enterprise, Adani Power also a good shorting opportunity. So with this, we come to the conclusion of this presentation. I hope you enjoyed this. Keep following us. Thank you.